Let's welcome Dean Maki. He's from Barclays Capital. Dean is one of the most accurate forecasters in the world. Bloomberg ranks you second on the overall economy. And Dean, these no doubt blew away your estimates as well. But this jobless rate stays at 9.6%.
That's right. We definitely are seeing the private sector job creation kick in at this point. The report emphasized that, both with that headline number, also upward revisions to the past couple of months. At this point, job growth has not been strong enough to push the unemployment rate lower over the past few months. We do think that is going to happen, though, as we move forward over the next few months.
And that number is going to be what, Dean?
In terms of the unemployment rate, we think that's...
what jobs created to bring that unemployment rate down?
Well, we think that if you even maintain this 150,000, you would be pushing that unemployment rate down over time. It doesn't happen every month, but if we maintain this, the unemployment rate will fall.
Okay, you mean gradually? I mean, give me a sense of, what to what? How many jobs created per month to what kind of unemployment rate?
We think that to keep the unemployment rate steady, you need something like 100,000 per month. So 150,000 will not cause the unemployment rate to fall every month, but to fall every couple of months, about a tenth.
And Dean, it's Sheila Dharmarajan here from the Bloomberg newsroom. Was there anything in the report that would make you think twice or pause about potentially unemployment picking up?
There was nothing that suggests that unemployment's going to be picking up going forward. What we're seeing is the labor force participation rate is on a structural downtrend here. It's because more and more of the baby boomers are retiring every month, and that will continue going forward. So we don't see the unemployment rate rising, unlike many others at this point.
Dean, we're getting this report right after the Fed QE2, and I was talking with Kevin earlier, Kevin Flanagan, another guest, who was talking about QE3, and thinking I'm kind of crazy for even imagining that that we're crazy talking about QE3. Were you thinking about that as well?
Well, we think the Fed may well go beyond the $600 billion that it's allocated, or that it's said that it intends to purchase. The Fed wants to see the unemployment rate fall from 9.6 to 5. So they're going to make sure that growth stays well above trend in coming quarters.
So even if we get good jobs numbers, we might see more stimulation then?
That's right. The Fed wants to see a real downtrend in that unemployment rate.
And what's that going to look like? What's that going to be in the form of?
We think that it would just be the Fed continuing the kind of purchases that it's doing, just stretching it out for longer.
Oh.
Hey, Dean, it's Adam Johnson out here in the newsroom. Does this mean potentially you up your CPI estimates? In other words, your assumption about inflation if you have both jobs and even more money coming in from the government?
We do think inflation is headed higher over the next year. So if growth does turn a lot stronger than we currently expect, that would put some more upward pressure on inflation. But we think we're basically at the bottom for inflation right now.
Dean, does this mean that the tax cuts, that tax cut extension, does that get harder to pass with this jobs report?
I don't think so. The unemployment rate's still very high, and that's a big political issue. And it is quite important. If all the tax cuts were to expire, that would provide a big hit to growth next year and would cause a significant slowdown in the economy.
Okay, so if they are allowed to extend, what kind of a lift are we looking at?
Well, it would be a big lift, about a percentage point relative to that very negative scenario if they expire. So we're assuming that the bulk of them are extended, so it wouldn't be a big plus for growth. It would just not be a big negative.
Okay. And Dean, help me figure this out. Why are we seeing more reaction in the bond and the currency markets than we are in the equity markets to this?
Well, markets do react in different ways. I think in terms of the equity market, it's been on a good run the past few weeks, so it may just not be extending further on this good news.
Okay, I see. All right, maybe they've priced all this in already. Who knows? Dean Maki, nice to see you.